Good morning and welcome to today's section of Market Mantra, and I am Ansu John. Major headlines: Sensex nosedives 290 points and Nifty by 103 points as Budget 2013 floats. Banks hammered. Key points of 2013-14 Union Budget, and we will look into currency updates and spot Nifty support and resistance level. Equity indices crashed to fresh 3-month low on Thursday after the final budget of UPA2 fell way short of market expectations. The BSE Sensex shed 290 points to close at 18,861, and the Nifty fell 103 points to end the day at 5693. Shares from the power, capital goods and banking sectors were battered the most, as the budget did not give any clear roadmap as to how economic growth and the investment cycle would be revived. Among the positives in the budget, the finance minister delivered on the fiscal consolidation and a stable tax regime. But the market was expecting much consideration that the finance minister had marketed the budget aggressively to foreign investors. Bank shares, especially public sector ones, were battered as the market viewed the higher agricultural credit target and continuation of interest rate subsidy on short-term crop loans and extending it to private sector banks as well was viewed as negatives. Shares of State Bank of India, PNB, Axis Bank, Bank of Baroda and ICICI Bank fell between 4 to 6%. Other stocks were badly hammered yesterday, losing around 8 to 10%. Out of the back, Reliance Infra fell 9.3%, Reliance Communication dropped 11.8%, while Reliance Industries slipped 2%. And while the budget may have had many announcements for attracting domestic or foreign money into the stock market, none of them appeared solid. Shares from the IT, FMCG and healthcare sectors fared better as investors sought a refuge in defensive sectors. Shares of Nestle India, United Spirit, Titan Industries, GlaxoSmithKline and Mahindra Satyam gained between 1 to 2%. Jet Air shares started off on a firm note on hopes that the stake sale deal with Etihad will fructify. However, profit-taking crimped much of the gains and the stock closed marginally higher at Rs 540. MCX shares rose 1.5% as the commodities transaction tax of 0.01 was much lower than what the market had feared. We are looking at the key points of 2013-2014 Union Budget now. Fiscal deficit for the year is at 5.2%, and for the year 2014 fiscal deficit seen at 4.8%. Commodity session, commodity transaction tax of 0.01% on non-agricultural commodities. Currency session, FII will be allowed to participate in currency derivatives segment. Bond market, rupees denominated bonds introduced for NRIs to attract investment from this segment. Foreign portfolio investment in excess of 10% in the Indian company will be classified as foreign direct investment. Entry norms for FIIs to be eased further. Government to borrow Rs 6.3 lakh crore from the market, while most players were expecting this figure to be around Rs 5.2 lakh crore. Surcharge of 10% on those with a taxable income of over Rs 1 crore. Surcharge on corporates with income of Rs 10 crore raised to 10% from 5%. Additional investment allowances of 15% over and above depreciation for corporates investing over Rs 100 crore in plant and machinery. Stocks to watch for the day. Adani Enterprises, promoter Adani Agro has offered to sell 8.5 million shares of the company through an offer for sale. State Bank of India has decided to revise the interest rate on non-resident external or non-resident ordinary deposits for the tenor of 1 year and up to 10 years to 8.75% per annum with effective from today. Panama Petrochem will buy back shares worth up to 179 million rupees at maximum price of 160 rupees a share. The offer will open on March 28. Mahindra & Mahindra and Tata Motors plans to hike prices of its sport utility vehicles after the government raised the excise duty on the segment by 300 basis points. Currency updates. The Indian rupee weakened sharply on Thursday, retreating from a 3-week high hit earlier after the 2013-14 budget increased spending despite keeping fiscal deficit target in place, while measures to attract foreign flows were seen as limited. Indian currency closed at 54.71 yesterday. And for today's Nifty level, Nifty Spot yesterday closed below the psychological level of 5700. Immediate support for the index is placed at 5670. A move below this level can drag index down to 5550 levels. Immediate resistance is seen at 5750. Only a 2 days close above 5850 can confirm that correction is over. I thank you. Have a nice day.